All right, good morning. Today is August 17th, 2022, and I'm back with another edition of the Wednesday live show. And we are in the middle of the dog days of summer still. August is typically August is typically a really dull month, and I'm not sure why because around here anyway, kids are back to school and summer vacations are pretty much over and that. But for some reason, over the years, I have noticed that August tends to be really sort of a dull month in the market. Although this year we've seen actually quite a bit more action than in previous years, past years. And as you know, the market's been kind of on a tear here. And interestingly enough, yesterday the S&P 500 finally, let's see if I got my chart queued up properly here. The S&P, whoops, that wasn't the chart I wanted. S&P 500 touched the 200-day moving average. And so there, that's this run from mid-July until up until now is pretty extraordinary, quite frankly, based on all the macro stuff out there and problems, the problems with, well, I guess it's kind of the Fed driving everything. I talk a lot about the Fed each week here, and yeah, if you watch enough financial news like I do and follow everything, I mean, the Fed is the is sort of actually, it's the perception of what the Fed is going to do seems to be the one of the primary driving factors in the market itself. And and of course, you'll hear a lot of people say that it's earnings that drive the market. And the funny thing is that earnings have been so-so. And so even companies that miss earnings or announce weak earnings or whatever. I mean, there's lots of problems out there in the economy, but if, the perception is that the Fed is not going to be as aggressive as anticipated, I believe that that's one of the main driving factors of this latest rally up to the 200 day, which quite frankly, I mean, the fact that the S&P rallied right to the 200-day moving average and then backed off. I mean, literally yesterday intraday when it touched the 200-day, all of a sudden it just dropped, which was kind of weird, but some of the other indexes, the ones that we watched, the Qs still have a little way to go to touch the 200-day. The the Dow, the Dow, there's the Dow. Dow managed to sort of punch through the 200-day. Now it's kind of testing it. So now let's see the Russell. I'll just pull up the ETF here. Russell managed to kind of push through the 200-day. Now it's kind of looks like, so here's the thing is there's been a couple of spots here. Let me go back to the S&P. I just want to look at the SPY real quick. Yeah, it's interesting. The SPY and the S&P have little slightly different charts. Actually, a lot of times I look at the SPY. I prefer the SPY because it more accurately depicts the open. Sometimes it's hard to figure out where the actual S&P 500 open comes from, but let's go back to that chart. Anyway, so I believe as of yesterday, and probably today we're down. Market's down less than 1%. So I believe that the S&P was within about 6% of the all-time high, which is pretty amazing. And it's all sort of based on this current run here. And I was just listening to CNBC before the show, and Bob Pisani was kind of he was pointing out a lot of the issues and the problems in the market, and Today the Fed minutes come out at 2 o'clock, and so it's going to be interesting. Obviously, just about everything the market trades on nowadays seems like it's in the rearview mirror, right? Like when that last CPI number came out, and even though it was 8.5%, it was slightly below the estimates, and that sort of kicked off the latest leg of this rally. It looked like the rally was going to stall out. Honestly, the last time we were here, I believe, it looked like we were going to sort of stall out and maybe consolidate more in the same area as this consolidation, right? And then CPI numbers came out and were a little bit better than, well, they were a little bit better than the expectation. And so sort of the consensus now is that inflation has likely peaked, and quite frankly, let's hope it has, because, I mean, even 8.5% year over year CPI is totally unacceptable because, well, it just is, because the last thing we want is the price of everything that we buy to continue to go up. Here's something kind of interesting too, is if I draw a trend line here across these highs, that trend line is sort of right where we are now. Let's see, where's my weekly? Well, jeez. There we go. Weekly trend line. The thing about it, when I zoom in, there's a couple of pixels here and a couple of pixels there, but for all intents and purposes, and this looks like it's a log chart too. Let's see, I got another one here. Let's see if that's more accurate. Anyway, that trend line is sort of looming overhead also. And if I change this to a candlestick, the trend line may or may not be different. So that's another sort of thing. I generally like to use absolute highs. So depending on how you draw this trend line, we're getting really close to it too. So the idea is that between the 200-day moving average, this trend line, and let me go back to this chart. This is my standard chart. It's got the 200-day moving average, the 50-day moving average, and I got some indicators down at the bottom here, which, quite frankly, by the way, this is something to note here, is the RSI. The RSI on the S&P here is, well, it's hard to visualize the way I stretch the chart, but this is last fall or whatever, and then you see what happened at the beginning. We know what happened at the beginning of the year. The market basically peaked right here at the beginning of the year, but it's probably not worth going back that far. But something to note here is how the RSI got extremely overbought and is kind of coming in a little bit now. So I mean, it wouldn't be any surprise at this point to see a little backing and filling. It seems like the market is abnormally resilient here lately, right? I mean, we've actually seen quite a few days in this run here where it just seemed like the market, would pull back or should pull back or whatever, and then buyers came in and rallied it up. So any weakness has been bought recently, and I did see something that I thought was pretty interesting, and that was the idea that foreign buyers are kind of experiencing, with the strength in the dollar, right? They're getting much better returns in their local currency than even the market has been providing to U.S. investors in U.S. dollars. So, and there, of course, there's lots going on beneath the surface too, and so that's kind of where everything is. Apple. Apple is, I think, the largest weighting most popular stock, largest weighting, and so Apple has just basically been on a straight up tear and is, practically back at the highs. And so this is probably accounts for a considerable part of the recent rally that we've seen. And quite frankly, this is pretty incredible. So, it's practically a V bottom, but not quite. It's more of a W type pattern, which, over the years I've always sort of favored the W patterns. The W patterns typically, the problem with something like this is that by the time that you get over the middle section of it, you've already had a pretty big rally, and the fact that coming off this low, it didn't exceed that peak until about, oh geez, more than halfway to where it is now. But anyway, Apple, let's see. Let's look at a couple other ones real quick. The big caps. Google is kind of not looking nearly as hot. The one that gets me is I'm really surprised how this chart looks like. These charts, for whatever reason, have been defaulting to log charts, which, no big deal. I mean, log charts, but I'm so used to looking at just normal linear charts. Yeah, this is the one that gets me. I mean, Facebook, which changed their name to Meta, the fact that this stock is down so much and so much market cap is gone really kind of makes me a little suspicious of how in the world that the index has managed to, because this was one of the largest market cap stocks out there, near the highs. So what else do we have? Microsoft, yeah, rally up to the 200-day moving average. So a lot of these patterns look very similar now, as far as the big sell down, that extra sort of leg down, and then the big turnaround here. So, here's the thing: is this 4300 level on the S&P. Let me go back to the actual SPX. 4300 is sort of the area that at the very beginning of the year, the market kind of fell to those same levels, and that's where it caught the bounce. And hey, I think part of this rally that we've seen here so far is sort of chasing, right? I heard someone talking about that yesterday on CNBC that I guess money managers have to no matter what they think the market's going to do, or how bearish they are, this and that, if the market starts leaving the train station without them, they have to chase, otherwise they're going to underperform. And so I think there was a lot of doom and gloom down near the lows, under 4,000 basically, under 4,000, tons of doom and gloom, and everyone's sort of, and quite frankly, it's human nature to be lean towards, more downside when you see this kind of price action here. And so, and then there's this whole thing about the Fed pivot, right? And so today's going to be interesting because the Fed minutes come out, and we're going to kind of get a better idea of what their thinking was last time. But quite frankly, what really blows my mind is the fact that these Fed speakers come out and they're extremely hawkish. Since everybody's convinced that the Fed is gonna pivot, as they say, or change their mind, you get all these Fed speakers that come out and say, hey, no, we're not. They're still planning on raising rates, and so the big debate now. I remember when that last CPI number came out. The big debate was the idea that instead of raising 75 basis points in September, they may only go 50, right? So as if that matters a whole lot. They've raised first they raised 25 basis points, and then 50, and then 275s, right? And now the big debate's whether they're going to go, 50 or 75 in September, and whether what they're going to do in December, obviously. So, and and so like weak economic, we're back to the bad news is good news type of scenario. But anyway, I did bring that chart of the inflation rate again because you know no matter what, as long as this is, and I mean, if you look back here, geez, that's we're looking at a year's worth of year-over-year inflation here, and they've already said, that they need to see substantial progress of inflation coming down, and so my guess is they're going to raise 50 or 75 in September. They're going to raise, 50 or whatever in December. And then, we're into a new year, so we'll see what happens. But I think that the market is the whole idea of the Fed pivot, and there's a lot of people out there saying that, or participants that believe that they're going to, cut interest rates next year because the economy's, headed towards recession. And then there's the debate whether we're already in a recession. So a lot of uncertainty out there. And quite frankly, this latest run just sort of sets things up for disappointment. The market tends to, you probably hear a lot of people say this, the market tends to overshoot on both sides. So, maybe it overshot to the downside at the lows here, and maybe it's overshooting a bit to the upside here, which I kind of think. Honestly, the last 5 days of this rally here felt kind of more like a short squeeze to me than anything else. So anyway, yeah, let's look around at some of the sectors. The energy is. Let's look at this oil right here. Yeah, energy to me is one of the more interesting sort of looking sectors. Not necessarily the price of oil, right? But this is one of the big drivers, obviously, of inflation. And as long as oil is, and look at this, and this is probably as of yesterday. Yeah, it's actually up a little bit today, 87.50. Um, but the fact that oil has come down significantly, now obviously, there's a lag. There's a long lag in the economy between everything that happens, and that's something I wanted to mention too about the Fed. Is that typically they say that a Fed move takes 6 months to work its way through the economy, right? And so the Fed's been raising rates like crazy, and um, there's people out there saying that hasn't even begun to work its way through the system, and just like oil prices, right? So when the price of oil comes down like this, there's a delay. I'm not sure how much the delay is, but gas prices have come down significantly in my area. So the highest, I have a gas station at the corner. The highest it got up to was 4.98, and now it never quite hit $5 here, and now it's like 3.58 or something. It almost seems reasonable. But I haven't really noticed prices coming down too much at the grocery store, but that's another story. Anyway, I like to think that oil under $100 a barrel is, will help contribute to, and I'm sure, the Fed knows this too. The question is like, is this pullback in oil um, gonna hold? So I wanted to look at, got a couple of energy stocks pending. These are beautiful patterns, by the way. Um, the nice thing about the patterns in a lot of the energy stocks, and of course, this is just generic XOP, XLE. The nice thing about this is they basically, longer term uptrend, obviously. They came down, and they had that sort of first bounce, and I'm not a huge fan of V bottoms, right? Because I don't think they're as healthy, and when you get V bottoms, you just never know where it's going to end. So they're actually the trickiest patterns, in my opinion. So I prefer something like this, where you get a big sell down and a bounce, and then backing and filling, retrenchment, and then you come back up. And so, I mean, this is a beautiful chart here. As far as like a rally over, these last couple of highs here, and then the big cup up. So, couple of the couple of the pending stocks that are fairly close to getting triggered here. Um, if the price of oil, and of course these are trading a little bit different than the price of oil too. So there was one. I think I mentioned this last week. There was one energy stock that had a pretty good look to it. Yeah, this DINO, but they had earnings that just came out, and then the earnings crushed it. So extremely, extremely good earnings, as I recall, just off the top of my head. But yeah, it's a pretty nice little pattern there. It's a little bit different than the ones we were just looking at. But so the energy sector's got a lot of promise, if you ask me. Um, and as winter approaches, there's all sorts of problems with energy over in Europe, and I think natural gas is at multi-year highs or whatever, and so that's gonna it's gonna come to the forefront. But anyway, yeah, these are pretty nice patterns here. They really are in the energy sector, and so that's why speaking of V bottoms, we had that not really so much of a V bottom as sort of this was a pending stock, as you recall, and then the earnings were coming out like right over here. Like you can see that gap down and that sort of long range move up. That was when the earnings came out here. This is honestly still a pretty viable looking chart here. I'm gonna keep my eye on this. Everything was sort of setting up here, and this is right about the area where it was going to trigger in anyway, and so it's got a good look to it. Basically, I would look for, I'd look for sort of a rally just above that high, or quite frankly, I mean anywhere in this area around 55 seems like a pretty decent spot for this. Let me go back. There we go. Yeah, so some sideways consolidation right around this level here. Um, Looks pretty good, and then some upward movement. Interestingly enough, that's I don't pay much attention to this, but you look at the 50 days just now crossing below the 200 day, the proverbial death cross. Um, I don't put too much into that. I mean, the price is above both those moving averages, the 200 days sloping up, and so it's got a pretty decent look to it. Um, there's definitely a trade here if this starts to gain some strength, and I kind of like it right in this area here because it's pretty easy. It's pretty easy to put a stop, say, just under this low or just above, right around 50, 49 something. So, um, hey, here's one of the other things though. Right now seems like it seems like a kind of a risky time for new swing trade entries, but you just never know. I mean, some of the from on a day-to-day basis, and I have a big watch list of stocks over here that you can't really see, but on a day-to-day basis, over to the right, and if I sort my watch list by percent gain, which I like to do, it's interesting. Like today ARK is down. Almost 4%. And it's been weird lately. There's been, lots of times where the energy and material stocks are, the percent gainers or the percent losers, and then on the opposite end of the spectrum It's the momentum stocks, the tech growth stocks, that type of thing. So today it's that is one of the days where the energy stocks are up and the momentum growth stocks are down. And so I use ARK as sort of a proxy. And the funny thing is that you look at the S&P, or make sure that this is, yeah, I was trying to make sure that's not a log chart. This is a little dicey looking, and it's going to be, I think it makes for a really good proxy of momentum tech stocks, new technology, innovation, all that kind of stuff. Well, that's what it's called, the ARK Innovation ETF. And so it has not rallied like the overall market has. And so that kind of shows you that um, those kind of stocks that really have driven everything up until the beginning of this year um, are not really faring quite as well in this current rally here. And so that kind of looks like it has the potential to break down. Like if I draw a trend line across these lows there, I drew the channel on this last week. Probably should have left it on there and saved it, but you got like Coinbase or whatever. This seems to be a really controversial stock. Um, you know, every time I turn around, there's some news on Coinbase. It's either like really bad or, or seems like it's good. And so you talk about a volatile stock. I mean, this thing is just nuts. I mean, for a stock to be, just above 50 one week and then, 120 the next week and then back down to, 85 or whatever. So extremely, the one that I looked at a couple of weeks ago that I still like to look at is this Shopify, right? So it's got this big base building, and then it started to pop out of it, and it's kind of, seems like it's coming in a little bit, but it's got a really nice bottoming pattern. So, oh, see, my chart gets skewed sometimes when I jump from stock to stock, but this is a pretty good one to keep an eye on. If this does, I don't know if this is ARK holding or not. If this does start to emerge from this base, and it really looked like it was going to last week, the week before, it was kind of coming up there and a couple of pokes above it, but anymore, there's a lot of sort of false breakouts, false breakdowns. When a stock spends this much time sort of trading sideways, you can expect that it's not necessarily just going to bust out and take off the first couple of attempts. But this is definitely worth keeping an eye on. I mean, if you're into sort of bottom fishing on something. So I just think that down the road, this does seem like it has a lot of potential. Now, I don't really follow the earnings or anything about it. I mean, it could be insanely overvalued even at these levels. There's quite frankly, there's probably tons and tons of oh well, Zoom. There's a good example of what I was just talking about. Zoom got downgraded to a sell by one of the big Wall Street firms, and something about missing their earnings or whatever. And funny thing is that Kathy Woods of ARK, I read something somewhere in ARK, a while back, she said this is a $1,500 stock or something crazy like that. And I read an article, and they can make a case for why this stock is tremendously undervalued, but man, it just can't seem to get up off the mat hardly. Right? It tried to, and this is a 50-day moving average, by the way. I'm not sure why. Just that's another thing about these charts is, well, anyway, stop complaining about the charts. Half of it's my fault because there's certain idiosyncrasies to these particular charts, but I'm jumping around symbols with a 50-day moving average on here. But anyway, this is another one that is very controversial because one can, you could have a debate on whether this thing's wildly undervalued and what the potential is. And, they can make a good case for, why this will go up. But if you look at it, it's really sort of struggling to base out here. And I mean the ranges, now that these have come down so much, the ranges are just insane, right? I mean, $100, 125, just this little narrow sideways range. So, it kind of looks to me like if it's able to break, over that trend line or 125 or whatever, I mean, there is a lot of potential. So, these are the type of things where I kind of keeping my eye on, as opposed to me they are more of a tell than what the overall market's doing based on the market cap of just a few stocks. So if you look under the surface, I think you get a little bit better picture. um, the thing I also think about a lot is the idea that a lot of these stocks have already seen their crash and their dot-com bubble explode. Hey, so people talk about that. I mean, this is exactly like what you see here in Zoom. This was a $600 stock. Now it's fluttering around $100. And so with between Zoom and Shopify and just on and on and on, I mean, these kind of implosions here, this round trip type stuff is exactly what you saw, you know, during the dot-com bubble and subsequent, sell off. And so, they've already had their sell off. It's hard to imagine. I mean, I suppose it's, quite possible, but it's hard to imagine. A lot of these things are still down 60, 70, 80% from their highs. And so it's hard to imagine them, really collapsing from here. I suppose that could happen, but so in a way, like the uh, the dot-com bubble has already busted, the new dot-com bubble. And I wanted to look at the Russell here. Um, and so how much downside do those things have? I suppose that there still could be a lot of downside, but this is a lot different than the actual indexes here. And the thing of it is, I don't know how many stocks are in this, but it's it's a lot. So anyway, it's interesting to look at the holdings there of ARK occasionally. The Spider ETFs. Let's look at some of these. Let's look at like the financials. XLF. XLF kind of been on a tear here. Um, I wanted to go back. Hang on, let me go back to. There we go. There we go. Now we're back in business. If I start with my normal chart here, I think then with the 50-day and the 200-day, yeah, it gives a much better picture of everything because on that other chart I was just on, the 50 days blue, and on this one the 200 days blue. But yeah, financials looking okay here. Not too exciting. Below the 200, below a downward sloping 200-day, coming up over that resistance, that type of thing. I was looking at there was a couple of financials here. Yeah, this was the interesting one. Citi here. Look at that sideways pattern. I mean, just incredibly tight range. This is what I was talking about, like August. This is typical summer trading right here, where you get something that for 3 weeks, almost a month, it just traded completely sideways within, and look how tight that range is. I mean, that's like a dollar and a quarter range for a month practically, and then it pops up out of it, and look at it now, trading in this tight range. So, the thing about financials over the years, I've come to the conclusion that the talking heads and the financial professionals, money managers and stuff, they always love the financials because they're they really there's not a lot of risk there. I shouldn't say there's not a lot of risk because I mean obviously they tank, but at certain times, like right now, you could recommend the financials. You're not going to get hurt too bad because chances are that they're not going to, and they've always been kind of boring. I mean, if you look at XLF over longer periods of time, it tends to spend a lot of time just doing nothing, right? And so, and of course, there's your big COVID sell-off right there, which happened in just a few weeks. But for the most part, the financials just tend to drift. And of course, now we're back to a log chart. There we go. So, but anyway, the financials, look at the weekly chart here is kind of interesting, to tell you the truth, because every time I look at financials longer term, it's a whole different sort of picture. Here's one way to think about it is, XLF has gone nowhere since, 2019, 2018 practically. There's the end of 2018. Could you imagine that? I mean, back in the fall of 2018, this thing was trading at the same level as it is now. It's all these years, and of course, yeah, there's been ups and downs, but I mean, this is kind of not what you want to see. So, oh, that's Citi. Why? What am I talking about? I was looking at the XLF. I'm still not completely awake because I've only had one cup of coffee this morning. But yeah, so we were just looking at Citi, which, by the way, if you look at Citi longer term, which I won't, it's a real eye opener. If you go back prior to 2008, yeah, financials are kind of boring. Technology spider. These weekly charts are actually more interesting to me than the daily charts. Daily charts have a lot of noise. You can get a pretty good look at what's going on looking at these weekly charts here. So, yeah, back to the XLF. See mining. Yeah, XOP's got a pretty decent look to it. They did some rejiggering like this XLC, this communication services. This has like Google in it, and yeah, it's kind of an interesting chart. What's interesting about this is that it's just right as we speak is just barely above the highs before the pandemic sell-off, and so that's why weekly charts are kind of interesting to look at. It's like you look at like XLE. There's the pandemic sell-off back there, considerably above it. So. Looks like XLU is making highs, and I'm not sure what that portends, to be honest with you. I always thought that utilities, kind of moved inverse to interest rates, and so we know interest rates have gone up, and why are people going to invest in utilities in rising interest rate environment? Geez, I don't know. The dividend rate on this XLU is 2.62, and so I don't know. It doesn't make a whole lot of sense, but I've never been a huge fan of utilities anyway. I mean, long periods of time go by, they don't move too much. So anyway, back to the daily charts here. We have a couple of pending here. This PSX looks pretty good, getting close to triggering in. Couple other new ones that you can log in and see. Kroger's looking pretty good here. So yeah, there's a handful of these energy stocks that are kind of setting up, in my opinion. Here's one. Here's another. So yeah, but here I am back to these log charts. The log charts kind of, they can throw things off. Yeah, there's a few of these energy stocks that have these like kind of cup and handle patterns. I think we looked at this recently. So that's what I think is going to probably be the thing, the sector anyway, that's going to have some decent looks to it. So again, Apple seems to be driving this whole market, which seems kind of crazy to me. I mean, this move in Apple, this sort of straight linear move, almost defies. It's kind of like back in March. That March rally was the biggest rally we'd seen all year until this latest one. And so, the funny thing is that so Apple came out with earnings and they were better than expected, obviously. Apple's driving the market, and so as long as and hey, maybe this does have something to do with what I said earlier, that foreign money coming in this market could be a factor, but it'll be interesting to see what happens here with the S&P now, touching the 200-day from the underside. So nothing too exciting happening here. Just sort of everything's sort of drifting, and on a day-to-day basis, it's one sort of sector or another sector taking the lead, and we'll just have to see what happens. So, anyways, thanks for tuning in, and I will see you back here next week.